Hi and welcome to Carnegie and our presentation of Ependion. My name is Markus Almerud. I'm an analyst here at the bank. So Ependion makes routers, switches and industrial panels for harsh environments. We have a fair value range of 149 to 163 Swedish krona. The investment case in short is that we see structural growth in a majority of end markets, and we see close to double-digit organic growth on average in coming years. A third of sales are train and trackside, about 20% is energy, and close to 15% is the infrastructure. Margins have expanded significantly, but there is more to go for. The margin target is 15%. We believe the driver of this is continuous volumes and the business unit Beijer Electronics. That business unit has improved its trough margins, but is not at the target level. There has been a strategic review, and the result is soon to be announced. The main driver of sales growth is energy, but we see continuous growth also in train and trackside. The train markets grow in the mid-single digits, but we also believe there is a need for upgrades, which will be incrementally positive. A large part of the installed base is diesel-driven. In Germany, that share is, for instance, about 40%. In the electricity market, there are several structural drivers. Consumption will grow in total by only 14% until 2050, but there is plenty of efficiency gains to be made, but the mix in this consumption is changing. We should see 50% electricity and hydrogen by 2050, so electric power consumption will grow by 3 times over the coming decades. Looking at production, the mix is also changing. Renewables is increasing, the share will double in the coming 15 years and will go to close to 90% by 2050. At the same time, the flows in the market are changing. So traditionally, we've seen energy flows from power generation to consumers and money flowing back. Going forward, we expect to see flows in both directions, and this will require more information in the grid and in the infrastructure, and this is where Ependion has its exposure. A couple of words about the short-term trends. Order intake has been lower in the second half of last year on the back of one large train customer changing order horizons in the beginning of last year. This customer put in a major order in the second quarter and has since been ordering less, but this should normalize, so it's temporary. Excluding that customer, everything is stable. The growth rate is stable. The margin is not at the target. Lifting the business unit Beijer Electronics is the key to getting there in our view. There has been a strategic review, and we are about to find out the results of this review. It will be announced at the CMD in the beginning of March. So in summary, we have a company with a large exposure to structural growth trends. The margin has expanded, but there is more to go for. The key to this is Beijer Electronics. They have gone through a review. That review will be discussed and announced at the Capital Markets Day in the beginning of March. Thank you.